Good afternoon, ladies. How are you?
Hey, doing good. How are you?
Good, good. Well, I want to welcome everybody to Bright TV. And today is Tuesday, May 31st. I really haven't been saying the dates, but I hope everyone had a great Memorial Day weekend. I know we're all a little bit behind from the shift of those days, but I just want to welcome everybody. We have Brittany Morris, we have Carrie Anderson, and we have Beverly Butts. Beverly is going to be our speaker to start with today. She's going to tell us a little bit about life insurance policies. So I'm going to hand it over to Beverly.
Awesome. Thank you, Melissa. I'm glad to be here. And so again, my name is Beverly Butts. I am a life and retirement specialist and founder of Shore Life and Retirement Agency. So I just want to kind of give a brief touch points on general like life insurance. When most people, when they think of life insurance, they think it's just for, if something happens to them in regards to they pass away, the policy is going to pay out to their family. And it's mainly, people typically just put a policy in place just to take care of their funeral expenses. But life insurance can be utilized, of course, in more ways than that. So I just want to briefly touch on those. Of course, you have whole life policies, and term policies. That's the two different type of life insurance policies that most people are familiar with. Term policy is basically what it says. It's for a term. It's for a certain amount of years, 10, 15, 20, 30 years. There are a few carriers that allow you to kind of go in between those years, but those are the most typical. So once those policies, most people think that once those policies, your term's out, that's it, the coverage is done. However, I actually have carriers that offer conversions of those term policies. So you're able to convert that over into a permanent whole life policy or a guaranteed universal life policy and get credit for what you've already paid in, which is a great thing. And most of them, the majority of them, base it on the health at the time that you took the term policy out. So if you have a 30-year term and you're 70 and your health is in bad shape at 70, but you want to convert that policy, they take it with what your health was at the time that you took the term, which is a great feature. Also, again, most people put in a term policy, typically young people, because they're usually looking to cover a mortgage or cover a lot of debt. Something happens and they want it to pay out to their family in regards to that. And most people think that that's all that a term policy is for, is paid upon death. However, there are carriers now that offer what we call living benefits. And this is a huge feature in a term policy. So what living benefits is, if you were to be diagnosed with a chronic, critical, or a terminal illness, and they have guidelines that you have to fall in order to qualify for that, you can typically access up to 90% of your death benefit to use towards your bills, whatever you may need. Actually had a client, we put a term policy on him with full living benefits last December and was in the process of putting a retirement plan in for him, and they required a paramed exam. This guy thought he was perfectly healthy, no symptoms, nothing. Did the paramed exam, his urine specimen came back showing that there was something going on. When saw his doctor, he has bladder cancer. But because we were able to put that term policy in place with those full living benefits, now he can actually take out a portion of he's going to take out somewhere around probably $20,000 to start off with to keep his bills paid until he can get back to work after his cancer treatments. So that is a great feature in a term policy. So a lot of people don't realize that you have access to that. And a lot of insurance companies don't. There are only certain ones that do. I do offer a few companies that have those benefits. So anytime I have a young person, I always put them in a policy that has those full living benefits, because we never know when we're going to be faced with something like that. Melissa, you know that for sure. And so
yeah, I was actually going to ask you about that and how that worked with the cancers and stuff. So I'm glad you brought that up.
Yep. So it's a huge benefit. Even whole life policies, there are some whole life policies that have those full living benefits. Most of them don't have all three, but there are a few out there that do. Most of them just have terminal illness or like nursing home coverage. So it just kind of depends. And then of course, whole life it's good from the time that you put the policy in, as long as your place is approved, as long as you make the premiums, it's good for the rest of your life. Those we typically put on more seniors, just to basically cover their funeral expenses, final expenses, things like that. So those are kind of the two. And then now I wanted to touch a little bit on what we call infinite banking. I know I talked about it a little bit the last time, but even now whole life policies can be used, and index universal life policies, but more whole life policies can be used as an infinite, what we call infinite banking. And so how that works is you get approved for the whole life, and then the good thing about it is you can actually use these type of policies to get out of debt within 9 years or less, without spending a dime more than what you're already spending on your monthly bills. So kind of how it works, is, we take what your monthly bills are and we set up the plan to where you're utilizing that, and then you're able to start paying off debt. It's kind of a complex thing, so not going to go into details in that, but that is available through life insurance. I never knew that was available until I got into this. So definitely that's can be utilized. And then of course, index universal life policies are great if you have small children, grandchildren. Put a index universal life policy on them, because by the time, when they're young, by the time they get ready to go to college, they'll have enough funds where it has gained enough compound interest and accumulated enough cash where they can borrow out of that index universal life and pay for college tax-free. Or maybe they want to start a business or
I have a question.
Yes.
I have a question on that. So, I am an idiot to insurance. I barely know much about it. But when my grandkids were born, I did take out like a Globe and a Gerber. So how are those compared to what you offer, and what should I do with those?
So Gerber and Globe typically went for their kids policies. Those are whole life policies. So typically they're, it's a policy, it's whatever amount that you got, it's basically whole life. And then, so the only thing is there really doesn't build a lot of cash value. Right. Some of them do. You just have to look at the policy and see where it is in regards to that. Where with a index universal life policy, they take your premium amount, and part of it pays for the life insurance portion, the death benefit, and then another portion is invested in the index with a zero floor. So if the stock market burns down tomorrow, you don't lose a dime of any money that you've put in there or earned, which is phenomenal. Okay. And then it compounds interest over a 12-month period. Mm-hmm. And so that's how you accumulate the cash value to the policy. So that's something we can always look at, what you have for that. Yes.
Also a question on that. So what's I know you said it's typically good for younger children or grandchildren. What's the age range that you'd recommend for somebody? You can start them when they're, a year old, and then even utilizing this for 20-year-olds, 30-year-olds for retirement planning, tax-free retirement. That's what I was asking for. Yes.
Yes, because it versus a 401k or a company retirement, because when you put money in a 401k, when you get to your retirement years, unless you convert it over into a Roth IRA, you're going to have to pay taxes when you're making the least amount of money. So with a universal life policy and index, we'll say IUL, those you fund it every month. It compounds. So when you, depending on your age, when you retire, you could typically have over $1 million compounded in cash value.
Do you know what the typical compound rate is compared to just a regular S&P?
Yep, it varies per company, depending on how what it's invested in. Number one, what their participation rate is, the company that I typically use that we show an illustration at, the interest is 6.97%.
Okay.
Awesome.
Yeah. So nothing that you will get in like a bank account.
Definitely.
And the good thing about it is there's no risk of loss. So you're not putting in the stock market where you lose money. And because if you put it in the stock market, in a market like we have right now, and you're losing money, it can take you anywhere from 3 to 5 years to get back to where you were before you lost. And then, so
So
it's a
how does
great
that work
way.
then if they're essentially investing it?
So it's just based on how the index does. They don't actually invest it into the stock market.
Mhm.
Typically they have 3 different investment strategies. S&P 500 is one of them. And then they have the one that I use is Barclays is another one. And then oh my gosh, right off the top of my head, I can't think of the third one. So there's 3 different ones. So depending on which company and how they, they do it, but they take all the risks. So, which is a great thing.
And so then you're still guaranteed the life insurance regardless.
Correct.
Okay.
Yep. And so depending on what the market does for that year, right? I mean, if the market is low, it might not compound quite as much interest but it's for 12 months. So it's not based on day to day. It's not based on month to month. So it's accumulation of the whole 12 months, which is phenomenal.
Awesome.
We have some bad months, but come out on the good on the end. Typically, you're, but those can be used again for children college funding. Say they want to start a business, they can take out money for that. They can borrow, say when they're 25, they want to borrow and buy a house, they can borrow the down payment, or maybe they might have enough accumulated to pay cash for a house. And then same thing then as for, again, 20 to 30 to 40-year-old, depending on how it's funded, you can use that even the same way. So say you're 20 years old and in 10 years you want to buy a house, you could borrow from that to pay the down payment for the house. So that's how it's basically as well, using it as your own bank. There's a lot of strategies out there to be able to utilize life insurance for different scenarios. And so what I do as a holistic advisor is I take your whole picture. So not just, okay, I need to cover a mortgage. Do you have retirement in place? If you do have that retirement in place, what does that look like? What is it going to look like when you are 50, 60 years old and going into claiming Social Security, when you should claim Social Security? We just did a Social Security seminar and most people claim Social Security too early. They don't max out their benefits with Social Security. So having all of the elements in place is what I make sure that you have, and you have that full plan together. So when you hit retirement, you can have the lifestyle that you want, versus what I've seen with the majority of people, they're living in poverty. And it's sad, but there's ways to strategize it. And most advisors don't do that. Most of the time when people have an advisor, it's just based on stock market. So that's a little bit about general life insurance, term, whole life, and then how you can even utilize them for to be your own bank. So,
yes, that's awesome.
Yep. You're muted, Melissa.
Melissa, you're muted.
So when are you coming back my way? Because I know we keep missing each other, but we do need to have some talk.
Next Wednesday, I will be back.
Okay, all right. Well, shoot me.
Hey, are you coming to the Charlotte area?
Say that again.
Are you coming to the Charlotte area?
Yes, I will be in Kannapolis Wednesday through the weekend. So,
well, we need to meet up too then.
Okay. Yeah, and we can do it virtually as well. So if you don't want to, can't meet in person, I do everything virtual now. So yeah, it can be done that way.
So Wednesday as in tomorrow?
Nope, next Wednesday.
Good, next Wednesday. All right, make sure.
Yep, June the 8th.
Okay. Perfect.
Yep.
All right.
Abigail will be graduating high school.
Aw, what day?
Thursday.
Okay. All right. Yep. All right. Well, we'll have to shoot me over some times and we'll get together. All right. Did you have any questions or anything for her, Carrie, or anything you wanted to add?
I don't. I'm just going to have my husband watch this because he makes all of our investing and stuff decisions. Plus, I feel like we're kind of at the end of this. I'm not sure that the one that you're talking about fits us, but now I'm thinking about my kids because I keep wondering, like, how in the world are my kids ever going to afford a house?
Right.
And I don't have $100,000. to hand out to each of them or whatever. But if they could start doing something like this,
Mhm.
maybe at a certain point they would have that.
Yep.
What did you say in there? Like, what are the, like, what is my question? The question is there a certain time frame that you have to have this in place before you can take money out of it? Or an age?
So typically you want to let it sit for an IUL, as far as that goes, about 10 years. Now the
Okay.
whole life is different.
Okay.
That can be accessed a little bit earlier, but typically for an IUL, you want to let it sit and compound for about 10 years for it to really gain that true cash, fund there available. And then after that, yeah, it's there and available. But yeah, and I, even you mentioned we're kind of at the end of this. There is still some ways that we can even look at yours and see exactly what you have and what could, it may be, maybe you have an old 401k sitting somewhere that can be utilized for your retirement in the next 10 years, 15 years that you're like, oh, I didn't know I could do that. So yeah, there's even more strategies that can be done for people that are in their late 40s, 50s, 60s, that we can optimize your retirement as well.
Okay, cool.
Yep, for sure. Yeah, would love to help anyone. I was hoping Shamika was going to be on here today because I really want to, I'm actually going to try my best to connect with her doing helping people with their credit and things like this, the infinite banking and getting people out of debt in 9 years or less could be huge.
Yeah,
for some of her clients.
that one we're going to talk about, the IUL, and then we're going to talk about the grandkids with me, and maybe converting some of our policies to something that's better.
We'll look at it.
And then of course, like for me, we can talk about this. It might be something you want to share on here, but because I was diagnosed with breast cancer in 2020, it's hard for me to get a life insurance policy for like 5 years. And so for anything for me to convert may not be an option. You have to tell me, but that's another thing for people is, don't wait too late. And don't, what's the word? Make sure you've got a good enough coverage that if something crazy were to happen, because I have no family history. I do not have the gene. No one in my family that I know of has breast cancer or had, breast cancer. And I was diagnosed at 44. So, and that's quite young for most people. So you just don't know what's going to come your way. And so being prepared with some kind of policy is great. And if I would have had the one where I could have drawn, that would have helped during when I was down a little bit, and maybe I did and didn't know I have it, because that's another thing I want to point out. You said is, most of the time people go to life insurance just to get life insurance. They're not really going to find out. It's not like a financial advisor, and the life insurance agent works for some random car insurance, home insurance thing, and they're just selling you policies. They're not really helping you plan. So what you offer is amazing. So yeah, it's great.
Yeah. And that's a lot of people don't, when they do have an insurance agent, it's a captive agent. So they're limited in what they have, what type of policies they have. I have access to 84 carriers. So typically I can find some type of coverage for you regardless. And the majority of people are underinsured. They actually say for every $50,000 of income that you make, you should have $1 million in life insurance coverage.
What?
That is the typical statistics. And I mean, we're all underinsured. Most people don't, because most people are like, I don't need $1 million in coverage. But you think about it, what would that do for your family if anything happens to you, especially when you're younger and you can afford it? So, and that's makes a huge difference. So yeah.
Well, I thought I was doing good on my coverage too. I made that statement.
Yeah.
Anyway.
Yep. And I'm still trying to add to mine. I'm not to $1 million yet. I'm getting there, but and I always tell people too, insurance will never be any cheaper than it is today for 2 reasons. Number one, you're getting older. Age is a factor. And number 2, your health. You never know what your health can be tomorrow. So insurance is never any cheaper than it is today.
Great slogan there to end this on.
Yeah.
All right. Well, anybody else have anything they want to add? If not, I think we'll wrap this up and make that today's broadcast.
think that's
And then
great.
we will see
That's
everybody
great
again
info.
next Tuesday.
Definitely. Thank you guys.
Super.
All right. Thank you so
Welcome.
much, Beverly. That
Thanks.
was amazing.
You're
for sharing.
welcome. Thank you.